Hello traders, you're welcome to this video. In this video, we are going to be talking about the Bollinger Bands settings. Okay, we're going to be looking at the best settings for your Bollinger Bands. Okay, so let us get right into it. We're actually going to be focusing on the settings for scalping, to be precise. We're going to be focusing on the best settings for scalping with the Bollinger Bands. Now, let us start by inserting the Bollinger Bands into our charts. Okay. Now, the Bollinger Bands are a powerful tool for scalping, actually. They are good for scalping. Allows traders to identify potential entry and exit points based on price volatility. So now let us look at how to set them off effectively. Okay. Now, as for the scalping settings, because we are talking about scalping in this video, so you might want to use a shorter period, typically 10 or 20. Okay, the shorter the period, the faster it is that it reacts to price movement. So let's just use 10. The reason is that shorter periods are more responsive to price movements. Okay, so it makes it ideal for fast-paced nature of scalping. Okay, all right. Now, for the standard deviation, we can use between 1.5 to 2.0, so just going to leave it at 2.0. Okay, the reason is that this helps to capture price volatility. A setting of 2.0 standard deviation is standard, but adjusting to 1.5 can help you spot more frequent opportunities with tighter bands. So we can just leave it at 2. Actually 2 also works, right? But you can decide to you can also decide to change to 1.5 if you want even faster opportunities or more opportunities. So if you want to spot more frequent opportunities. So now, as for setting up the Bollinger Bands, we are using the MT4 platform. So we saw that it just goes straight to insert indicators, go to trend, select Bollinger Bands. Okay. Now, how do you identify opportunities using the Bollinger Bands? How do you identify opportunities? Remember that we are scalping, okay? So a buy signal is when the price touches the lower band. Basically, when price touches the lower band, it indicates that price is in an oversold condition, presenting a potential buying opportunity. On the other hand, sell signal is when price touches the upper band, okay, like something around here, indicating overbought condition, signaling potential selling opportunity. Then when you have the band squeezing, like something around here, when the bands come close together, it indicates low volatility. This often precedes a breakout. So you might want to look for a price move away from the bands after the squeeze. See, after the squeeze, you can see the price began to go up. Okay, that can now serve as your entry signal. You can just enter after the price begins to go up. Or in this situation, now see that there was also a squeeze here, the ranging market, and after the breakout you can see that price begin to go down. So after this thing just broke out and pierced the lower band, can enter a sell, set stop loss above the swing high. Take profit can be when the price now moves above the middle band, when the piercing of the lower band eventually stops. You can use that as your exit signal. You can also use additional confirmation, additional indicators for extra confirmation. You can decide to add on maybe the RSI, for example. You can add on the RSI just to give additional confirmation. So for example, now here we can see that after the sell happened for a while, you can see that the RSI entered the oversold territory. So it would have been a sign to exit our sell trade. And as the RSI began to point upwards, it would have been a perfect opportunity to confirm our sell exit. Okay, you can add on other indicators too for extra confirmation. And then you can also use support and resistance levels, support and resistance levels, just add to extra confirmations as well for your exit and entries. Okay, now it is also very important to practice proper risk management, because even with the tight settings, you have to ensure that you have a solid risk management strategy in place so that you don't end up losing more than your budget. Okay, now this includes defining how much of your capital you are willing to risk per trade, and it also includes um, the leverage that you are using, you know, so that you don't over leverage. Leverage of 1 to 100 is actually okay. And then your lot sizes, yeah, the amount that you are willing to risk per trade is going to determine the lot size that you open per trade also. So perhaps 1 to 3% maximum should be okay. All right, even that fee is quite extreme. Some traders may prefer to just use 1% maximum risk per trade. Okay, and it's important if you try to practice on them first before committing to a real account. Okay, for committing real money, right? It's very important. So I want to practice the strategy. Basically, the Bollinger Bands just give signals based on when price touches the extremes of the band. When price touches the upper band and shows sign of coming down, for example, we can see here price touched the upper band, and then you can see that a bearish candle followed suit. So that was a sell signal. Then for your buy, when the price now touches the lower band and the lower band begins to point upwards, that's a sign to exit yourself. Then for a buy, you can see that price has already touched the lower band around here, and then we had a bullish candle you can see around here, and it got to the middle band. We would have entered a buy there, and then for a sell, we could have actually exited here because we had a bearish candle form. Or on the other hand, because the candle did not come back much into the lower boundary, we could have also considered holding the buy trade until we finally had a breakout of the middle band, and then we have exited our buy trade. So the Bollinger Bands are relatively easy to use. So I hope you found this video insightful. Kindly like, subscribe, and hit the notification bell so you don't miss out on further trading videos. Cheers and happy trading.